Trading during earnings season. Now, 4 times a year, public companies declare their earnings, and what they're doing is sharing with their shareholders whether they're making money, whether they're not making money, what kind of challenges that they're facing. And here's what earnings presents to investors. It gives you a really good opportunity because it gives you a lot of volatility while you're trading. Now, if you're new at trading, you might want to stay away from earnings until you get your feet wet, because with a lot of volatility, it can go up a lot or it can go down a lot. But if you've been trading for a while and you have some experience under your belt, it can really present a great opportunity to make some extra cash. I'm going to give you an example that I myself did on Tuesday. Coinbase. So I've been trading Coinbase for a while now. I love crypto companies. I believe in Bitcoin long term. It goes up, it goes down, and it has a lot of volatility. So it gives you a lot of opportunities to make money when it goes up and make money when it goes down. So Coinbase is declaring their earnings on Thursday. Now, this is a trade that I myself did on Tuesday. I sold a $325 put. I'm going to explain to you exactly what that means. When you sell a put, what you're doing is you're collecting money, and you get to keep that money no matter what happens. And for that money, you're committing to buy 100 shares of stock, but only if it drops below a certain price. Now, here's the great part about selling a put. You choose what price you want to pay for the stock. So for example, I already have a bunch of Coinbase because, as I mentioned, I've been trading it for a while. So I have some Coinbase that I paid a little bit higher prices for. So I sold a $325 put on Tuesday, and I got paid $330 to do that. So here's what that means. I get $330 dropped into my brokerage account right then and there. If Coinbase drops below $325 before Friday, before the contract expires on Friday, I'm buying 100 shares. Well, that's okay because I already like Coinbase, and I already have Coinbase that I paid a higher price for. So if I do have to buy it at $325, what I'm doing is I'm averaging my cost down. And if the price does not drop below $325, I don't buy the shares. Either way, I keep the $330. Now, I'm going to give you some other ideas. You don't have to sell a $325 put. Like I said, you can choose the price at which you're comfortable to buy those shares. So you can choose to sell, let's say, a $315 put, or let's say you want to go a little bit further from where it's trading now. You want to sell a $310 put. So as an example, a $310 put closed at $165 on Tuesday. So that means $165 gets dropped into your account, and only if it drops another $50 before Friday, you only have 3 more days, Wednesday, Thursday, Friday. If it doesn't drop, you don't buy the shares. Either way, you keep the premium that you're paid. How cool is that? And here's the best part. If you do have to buy the shares, it's totally fine. Coinbase is a solid stock, and because it has a lot of volatility, there are a lot of opportunities for it to go back up. So you can literally sell a covered call against it on Monday and collect money again. So here's what it means when you sell a covered call. Basically, you already have the shares, and then you can get paid again a certain amount of premium, and you're committing to sell your shares if they go higher, more than what you paid for the shares. You get to keep that premium no matter what happens. So if the stock closes higher than the amount that you set ahead of time, you sell your shares and you make money. You make money on the shares and you make money on the premium. And guess what? If the stock closes lower, you keep the premium you got paid, you keep your shares, and then you sell another call next week. So selling options is like making money when it goes up, when it goes down, when it stays sideways. You're literally putting cash in your pocket every single week. Listen, guys, if you're just trading stock and you're not trading options, and you're buying some shares and you're hoping and praying and waiting for it to go up, then you have to sell it, then you get paid. If you're doing it that way, you are literally doing it all wrong. It takes just a little bit of time and a little bit of effort to learn options trading. There are literally only 2 strategies you need to know. Sell a put, sell a covered call. Watch my videos here. I'm literally putting up a video each and every single day for 1,000 days. Selling puts, selling calls, walking through different tickers. If you want to see a particular stock, let me know. I'll do a video on it next. I hope this helps. Happy trading.